Okay, welcome back to another class. This class is the fourth part of the strategy I trade. When I started teaching you guys, I introduced um what I would teach you in this class, what I would teach you. I taught you market structure, liquidity, and then point of interest. And our last class we introduced the rules or guidelines I use when picking a point of interest. And I gave you example of all of those. So in this class, it's going to be about directional bias. That's the last part of the class. There's not going to be one class or two class because there's a lot to learn about directional bias. Everything I taught you is like pieces. You see, so now when I teach you, like started teaching you directional bias, that means all of those things they come in place, like all of them they're gonna come together because market structure is something different, POI is something different, rules, all of those are something different. That means the physics. So directional bias is one of the things that was going to combine all of those things that I teach you guys to started working as a whole. So directional bias is very important. It's very important. Directional bias is very important. So what is directional bias? And then how do you use directional bias? This is what I'm going to teach you today. We're going to have a question and answer class. It's supposed to be today, but it's only one or two people that joined. So it's going to be question. This will be a question and answer class where you'll be asking and I'll be answering questions based on what I taught you. But still, can pick time for that because I'll be totally active. I'll be totally active. So let's continue. What is directional bias? Directional bias basically, in simple terms, you means from the word direction, is you trading alongside the direction of the markets. That means you're trading with the markets. You're not predicting, you're following the markets to trade together. Do you understand? Directional bias is you following the overall trend of the markets. If market is buying, you should follow the market to buy. If market is selling, you should follow the market to sell. We know there are two ways we can confirm if market is buying or selling. By what? Knowing market structure, which is what I told you in the first class. What is market structure? Market breaking highs or lows to confirm a specific trend. So for markets to be bullish, an uptrend, markets should what? Break the last high, which is I call it a swing high, or you can call it a key label. Market should break this high to give you a what? Break of structure. This is how you can confirm a uptrend market. I said you should wait for two consecutive break of structure. That would determine a like the overall confirmation. What I mean by that is if market is buying, if market is buying, guys. So for you to confirm an uptrend, I say you should wait for two consecutive break of structure. Market break one structure that is not 100% confirmed that market is bullish. Market can break structure to grab liquidity and continue selling down. But if you have two consecutive break of structure, that is 100% sure that, okay, market is currently bullish. That's how we determine a bullish market, by having what? Two consecutive break of structure. If we're looking for higher time frame, which we're going to talk about when we come to use internal and external structure, it's all part of directional bias. So that means directional bias is going to be about 3 or 4 classes. There's range. We're going to talk about range. We're going to talk about internal and external structure and how to take advantage of that, right? So based on this thing, I'm going to align directional bias based on what I teach you, these 3 concepts that I teach you: market structure, liquidity, and then point of interest. So directional bias is you what? Trading alongside the direction of the markets. If you can confirm your bias from a specific time frame, the time frame you use for your bias, if you can confirm break of structure, two consecutive, that means I have this one break of structure and I have another break of structure right here. That means I have two consecutive break of structure. Does that mean I confirm this market is bearish? The same thing when it comes to bullish market. I will have what? Two consecutive break of structure. Market by what? Market breaking high. Break of this high, that's one. And then I have another break of this high. That's two. That confirmed to me that, okay, market is currently bearish. But we're going to talk about a time frame alignment using higher time frame to align with lower time frame. That is very important when it comes to directional bias. And we have to know where we expect continuation and then reversals to come from. I said for every impulsive move we have, right? Every impulsive move we have. What is impulsive move? The move that is meant to drive the market in the current direction. So if this market is bullish like this now, so why do we expect impulsive? What do we expect impulsive move to do? Is to take out this high. And what is the purpose of taking out this high? Is to what? To drive the market in the current direction it's currently at. What is the current direction? Market is currently bullish. So that means this current break that we're expecting to come in, it should break this high, break this key level. That means we confirm that this move now is the what? Impulsive move. Because we know the job of an impulsive move. So that means even if market is bearish, right? There's a zones that we expect to buy from, and there are zones that we expect to sell from. That's what I'm going to teach you today. We will not be expecting to buy from any zone and will not be expecting to sell from any zones, right? So this buy that come, this buy, we know that this is the what? Impulsive move. And what is the purpose of that impulsive move? Is to maintain the current structure of the markets. So for this one to be impulsive move, it needs to break the high. That means we determine, okay, this is the impulsive move. And then this correction move. What is correction move? So correction move is a move that comes into the markets to retrace, to correct the movement. Sometimes all of this impulsive move that we see is called inefficiency of the market. Market so it's not supposed to be buying only aggressively, right? Same thing when market is selling. You don't expect market to just sell like this, just to sell all the way from this price, which is what? 74,000 to sell all the way to 60,000 like this in a straight line. This is not how we expect a sales to come from. Sales should do something like this. To sell, buy a little. Sell, buy a little. Sell, buy a little. So how do we confirm our impulsive move? We confirm that this is this is a what? Bearish market because of what? We have two consecutive break of structure to the downside. We have this break of structure and then we have this break of structure, right? So that means we have two consecutive break of structure to the downside. That means we confirm our structure, which is a bearish structure. So where do we expect impulsive and correction move to come from? And what is impulsive move in this case? Impulsive move is meant to what? To drive the market in the current direction. So we know that market is bearish. What is the purpose for markets to maintain this bearish? Is to take out this low, this last low. I'm going to show you everything in the chart. So it's going to take out this last low, right? This is the what? Purpose of impulsive move. So that means, you see, this buy that come in, right? It comes to correct this impulsive move that breaks structure to the downside. Now also this buy is a what? Corrective move to this impulsive move that come into the market. So now we're expecting markets to tap into a zone, then market to give us another what? Another impulsive move. And what is the power of impulsive move? It's take out a high, a low. So that means we should not be looking to buy at this zone because we know this zone is meant to what? To be broken because it's what? It's where the impulsive move should what? Coming. This zone is not meant to be held because what? Correction move should be a correction move. And then to be a correction move, it must take out the low. So that means even if we try to buy from there, we're going to take stopped out. We're going to get stopped out. So directional bias is you trading alongside the higher time frame and lower time frame alignments of the current structure of the market. Right? Higher time frame is what confirms to you what is the overall trend of the market. Right? That means higher time frame is where you expect your swing high and swing low. Why is your swing high? This swing low, and this is your what? Swing high. This is your swing low. This is your major and major high and major low, right? This is how you, in higher time frame, this is what we can determine, right? So impulsive move and where to expect another continuation of what? No, correction move, right? And where to expect continuation of this impulsive move is what internet structure is very important. External structure determine our overall bias. which is a higher time frame. Internet structure determine where to expect a reversals and where to expect that impulsive moves to come from. So now we know what we expect, how market move. Market make impulsive move and then correction move. Let me impulsive move. This is the impulsive move, right? Market taking what this move to break structure to the downside. And then when market retrace back to this range, which we're going to talk about range when we come to our, I think, third or fourth class, right? This is called what? A corrective move. Market correct. I'm going to show you why market is supposed to correct this move when we come to the third class, right? So after a impulsive move, which we expect to drive the market in the current direction to break structure to the upside and then correct back into the range before we expect another what? Another impulsive move. And then based on what I teach you about continuation and reversal pattern, you know where to expect a continuation and then what to expect for reversals. So if market is bearish, giving us a series of lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, lower highs. For markets to turn bullish now, we want to see market structure shift. I'm not going to go in depth with this because we talked about market structure shift. But market breaking this lower high, right, to give us a what? A market structural shift and give us liquidity. If there's no liquidity, we'll always go to the what? To the extreme level, which is this one. Then we expect what? Continuation of a new trend, right? So that means if higher time frame is like this, we have a high, a low, and another high, right? So before we expect this correcting move to come from, we want to see something like this. You see, market is bullish, right? So we want to see market what? Since market is bullish from here, let me mark this red so that you guys can understand what I mean. From this here, from this high, this is where we expect correction move to come from. We cannot just be started and jumping and started selling BTC from this zone, right? We want to see market structure shift. How do we see market structure shift? Then we use internet structure. So in high time frame, in external structure, we know this one is a one move, right? But in internet structure, we want to see something like this: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then we want to see structural shifts. Then we'll be looking for what? That correction move into the range, which is what? This move that come in, this correction move. You see, market is bullish, yes. Then we are we got what? A structural shift. That means it's time for markets to what? To make a corrective move. That's when we started selling down, and we sell down to a zone where we expect a what? Continuation of this what? When market what? Give us this corrective move, then we expect markets to come to a range where we expect what? Continuations to come from. And at that range, because we have two POIs, which is the breaker block and then this other block, and in all of those two zones, right, we want to see confirmation for markets to continue buying. What are those confirmation? Is the rules, is that our continuation and reversal move, right? So when market give us this structural shift, we take a correction move and then market taps into this breaker block. We'll not just be looking to continue buying because we say, okay, this is where we expect another correction, impulsive move to come from. And our target is what? To take out this recent high. We'll not be saying something like that. We want to see another what? Because we're bearish in lower time frame, we want to see lower time frame turn bullish at this order block. Just because overall is bullish, that does not mean market will start buying from here. It might retrace back all the way to this order block, right? So directional bias is you knowing where to expect correction move and where to expect what? Impulsive move in the market. So when market taps into this breaker block, we look for, okay, unmute yourself, ask the question.
Hello, sir.
Yeah.
Yeah. So, about the market structures
Yes.
and the directional bias on the
Yes.
higher time frame,
Yes.
are we supposed to look for the entire strategy, which is the SLP, structural liquidity and POI, or we are just supposed to look for assuming higher high, higher lows, higher high, higher lows, and on the
Yes.
lower time
In
frame
high,
we look
yes,
for
in
the
high,
entire?
Yeah, in higher time frame, we're supposed to only look for our trend, which is what? Breaking higher highs and higher lows. Then to confirm that we wanted to see 2 consecutive breakup structures. Our SLP strategy, if it formed, is clear, it's okay. If it didn't, it will form. Because in higher time frame, you might not notice that you have an SLP because you just see like for bearish market, you have a low, then a high, then a low, right? Before you create this low, market might do something like this in lower time frame to give you like inducement and then come back and tap into this zone. But in high time frame, you not see the inducement because you're dealing with high time frame candles. So let's say, let me show you, for example, if you go to the daily time frame, let me just delete all this. So if you go to the daily time frame, if you look at this one, right, where do you have your breakup structure? You marked your structures. You have this as a breakup structure, right? This low got taken out. And then you have another breakup structure. So you see, in higher time frame, you have these 2 consecutive breakup structure that confirm your what? Trend, right? So you dealing inside this range. Oh, we did not talk about range. Dealing inside this range from this high to this low. So when it comes to picking the point of interest, that's when you use your what? Your SLP confirmation, your market structure shift, because you will not see any market structure shift here. For high time frame, for me to expect a market structure shift, right? It must break a what? The lower high, which is what? This high. This high right here. This is our what? Lower high. Because it is the last high before another breakup structure. So if market take out this high now, I have a market structure shift in higher time frame, which is my daily time frame. Then I will mark the area I'm expecting markets to come and pull into before we turn bullish in higher time frame, right? So, but market did not take out this high. That means still our higher time frame structure is still bearish. Market did not take out this high. That means our still market structure shift in high time frame is still bearish. Until market take out this high, we don't have structure shift in high time frame. So you see, you looking for that SOP structure in high time frame is kind of waste of time, I would say. Because if you go to the weekly time frame, you look for those in the higher time frame. You're not trading weekly or monthly time frame. You're trading 4 hour, 1 hour, or 1 day time frame. So you look for your SLP, that's okay. It's all right. You just have to know that what is high time frames telling you. To confirm your structure, you want to see breakup structure. You want to see market breaking lows. If possible, multiple breakup structure. Market breaking this low, which is this low that is current in the current trend, and then what? Breaking the low of what? Previous trend. That means this previous trend, when market was bullish, there are lows. When market break this low and this low, that means you have 2 consecutive breakup structure. Market break two break structure, breaking the current low of the trend and then breaking another key label on the previous trend. That's a strong confirmation of what? Bearish structure. So what we see now is we see market is clearly bearish, right? So you're looking for SLP structure is something good for high time frame if you're dealing with high time frame, but we're not dealing with high time frames because there are zones that we expect the correction move and
Oh,
you said?
I was like, you see the current structure, the
Yeah.
downtrend structure right now. Assuming market is to buy up and start selling from that other block and
Yes.
uses the current high as an inducement, would you consider that one as your form of SLP strategy on the
Very,
higher
very,
time
very,
frame to
very good,
actually continue
very
looking
good
for
question.
sales?
Very good questions. You see, if you're dealing with multi-time frame analysis, daily and weekly, right? For daily, I said this is where we expect structural shifts to happen. At this zone, if you can see clearly, this is where we expect structural shift to happen, MSS to happen, right? But if you see for the weekly, which is this weekly time frame, where is your range? This is why you go to your last breakup structure. That means this is your high for weekly time frame. For you to have a structural shift in weekly, market should take out this high. So if you might be bullish in daily time frame, but still bearish in what? In higher time frame, which is weekly time frame. The same thing if you go to monthly. You might be bullish in 4 hour time frame. You might be bullish in monthly time frame. You might be bullish in 1 hour time frame, bullish in 4 hour, bullish in daily, bullish in weekly, but monthly you are still bearish. That's when you determine with higher time frame. That's why I don't want to be rushing things. That's why I want to take things slowly. We want to talk about that. Directional bias is supposed to be like 4 or 5 classes because there's a lot to talk about.
Okay.
Do you guys understand?
Okay.
Kobe, do you understand? Did I answer your question?
Yes, sir. Yeah, sure.
Okay.
Let's continue.
So, so if we go to lower time frame, what do we want to see? We said we first need to confirm our structure, which is what, are we bullish or bearish? We confirm bearish by what? Break of structure. So you see, we have a break of structure. That means we have this high as our lower high, higher low, and then this is our what? Lower low. So we have a range, which we're going to talk about. We're going to talk about range. You have a trading range, right? So that means my high time frame now currently is bearish until market take out this high. But I'm not dealing with high time frame. I deal with daily time frame to know my bias. So my bias, higher time frame bias is bearish, right? It's bearish because we have what? Let me show you guys. If you can see, we have a what? Impulsive move and then corrective move. Another impulsive move, we had corrective move now. We have another impulsive move to break this structure because I told you what you'd be expecting from corrective move and impulsive move. So this impulsive move breaks structure again to the downside. What then in high time frame, which move are we expecting now to come in? Is what? Corrective move, because we just had an impulsive move, right? So we need to correct this move. So that's why we're having these buys, and then market tapped into this daily order block. Now we started selling down. So we'll not be looking for sales because in lower time frame, we're still bullish, right? Because of this corrective move. We want to see higher time frame is aligned with lower time frame. Then we expect, okay, we finish this corrective move. Now is what? Market to give us what? A impulsive move again. And that impulsive move is what? Target to take out this high. Right? So then we have another impulsive move, continuation of what? Corrective move. So this is the move that currently this fair, which is the BTC. My network is very bad. Which is BTC is making. This is the move currently BTC is making. So if you can able to identify your impulsive and corrective move, that means you know what market likely to happen next. But mind you one thing, it's not anywhere we expect corrective move to come from. Let's say market is bullish for a specific period of time, right? Giving us a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So when market was buying, there are zones that market has not used, right? Market might be using this breaker block to continue buying off, using this breaker block to continue buying off, using breaker block to continue buying off. So there are zones that market has not used. This order block, market has not used it entirely, right? Previously, market has not used it. And this order block safe, market has not used it. And this new order block safe, market has not used it, which is also an inducement to this one. If you want to look for your S&P structure in the higher time frame, which is not the most important thing actually, because we're not trading higher time frame. We're going to talk about that anyway, right? All of these red box that I draw, market has not used them previously when it was buying. That means these things are very not important when market is selling. They're very important because those are the zone you expect correction move to come from when market started selling down. So when you have a structural shift in higher time frame now, I have market structural shift breaking this low, right? Market fully into this range because I have trade range to continue. So this price zone that market has not used, these are the zone I'm expecting what? A corrective move to come from before continuation of what? Another impulsive move. And I'm not looking for corrective move just because I break this new low anywhere at this zone, because all of these zones are mitigated. We won't talk about mitigation block. I will only be expecting corrective move to come from this pressure zone. I'll be expecting correction move for markets to continue selling down. So you see, all those new zones that market has not used when it was buying are the zones that you expect markets to use for corrective move. Let me give you an example here on BTC. So we said the first thing is to identify your these types of move, right? This is the low. You know, any low that will take out this, any move that will take out this low is the impulsive move, right? So why do we expect correcting move? We expect correcting move to come from a zone that market has not used when it was buying. So if you can see here, we have an order block that market has not used. Market tapped into this zone, and then we had this correction move, right? Then we identify where we expect the continuation of this impulsive move to come from, which is what continuation of our trend. So if you see, we have this order block that market has not used. It returns to breaker block. And market tapped into that breaker block, and we had what? Another impulsive move. And that what that impulsive move did is what? It break this structure to the downside. It break this low. Right? So you see, in high time frame, you see what we're dealing with. We have break of structure and market tap into this bearish zone that has not used before. If you go zoom back to the previous market structure, you see market has not used this order block when it was buying. You see it? Market has not used this order block when it was buying. So that means it's not going to work at all, right? So market tapped into that order block and give us what? Another correction move. Even this one safe, the market used. You see, market has not used it. Let me show you guys. I don't know if you can see clearly. This order block that I marked, this one, you see market has not used when it was buying off. But when it started selling down, market tapped into this order block, and what happened? Market started giving you this corrective move for another impulsive move to come from. So you see, all of these corrective move, we expect them to come from higher time frame that market created when it was buying, but it did not use them. Can be a breaker block and order block. So you see, market tapped into that zone and started buying from there because it was fresh. And see what happened when market come back for the second time. Market come back for the second time, use that same zone as what breaker block to create for another impulsive move to come from. So you see, it used two zones. The first zone is used as an order block where it expects the correction move to come from, and a correction move come from the zone. It retraces back all the way to this another breaker block right here that market has not used. This one is also a breaker block right here. You see it. That is in line with this order block. That's when another corrective move or impulsive move come from. And then market use same zone again as a what? Breaker block. Because I say breaker block is a failed order block. Market has used same zone again to continue selling down. That means now what do we expect? Correction move to come from. Where is this correction move to come from? Is this a valid zone for correction move to come from? We don't know yet. We have to look for previous market structure. So that means if we go to the previous market structure, what do we have now? We have this zone. There's an order block sitting below this one. You see it? This order block. It's also market has not used it when it was buying. Market has not used it when it was buying, right? So if market tapped into this zone, this is the zone we expect what? Another corrective move to come from the higher time frame. So you see, market has tapped into the zone. So if we have a market structure shift at this zone, then we continue. Okay, we say, okay, now currently we are in a what? Corrective move first. Then we what? Take our what? Buys from there. And we know that in lower time frame, we're in what? Bullish, because market is buying. But in high time frame, we know that definitely we are in corrective phase. So where do we expect continuation of that, our impulsive move again? I think I'm rushing too fast. I'm mixing a lot of things together actually. So I will be stopping here. But let me finish what I'm teaching you guys. So we know that correction move is coming from a valid zone that market has not used. We said it's not any zone that you be expecting what market structure shift to happen. Just because market is bearish, giving you lower low, lower highs, lower low, lower highs, and then you have a market structure shift, right? You mark this as your market structure shift. So the first thing you say, okay, I have this as a breakup structure, as a market structure shift. So what will I do next? I will look where this zone is. Where is this buying coming from? Is it coming from a valid zone? If this buy that caused this market structure shift is not coming from a valid zone, I don't consider it as a what? As a market structure shift, right? Because market might use that to create an inducement to this zone now, right here, to create an inducement to this order block for price what? To continue selling down. So you see, where to expect corrective move is very important. And that corrective move is coming from a high time frame zones that market has not used when it was buying off. So when you confirm your structure in lower higher time frame, your what phase are you? Are you in a impulsive move phase or corrective move phase? If you confirm that, that's when you go to lower time frame. Then you look for your now when market tapped into this zone now, we say, okay, this is what we expect corrective move to come. What do we expect? Because market was buying, was selling bar. So if a corrective move to come from, we know that corrective move should be what? A buying. Market started buying. How do we confirm a buying? That means it's a reversal. Because market was selling down, it was selling. Now we're going to turn bullish. That means a reversal. We're going to look for a what? Reversal pattern. So when market is selling down now, we know that, okay, market is breaking structure, higher highs, higher lows. Market gives us a lower low, right? Lower high, lower low, lower highs, lower low. So if to say market tapped into a zone that we expect a what? What do you call this? We expect a corrective move to come from. What do we expect first? We want to see breakup structure to the upside. Before we see that breakup structure, we want to see lower time frame. What if we see we have to see lower time frame confirmation. And what's that confirmation is our structure. In lower time frame, we may see something like this: lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, lower highs. Then market tap into our zone, then give us market structure shifts, liquidity if there's need of liquidity, then we continue what? For our what? For our buys. And that buy is what? Corrective move from the what? Higher time frame. So you see, this zone that we have now, market tap into this zone, which is right here. So we have to see structure shift in 4 hour or 1 hour before we continue buying. And then if we started buying, we're going to put this in our mind that what higher time frame is saying. So higher time frame, we're in a corrective move. We're not in impulsive move because we're not bullish. We're bearish. We're just trying to take the trade. So that means you see, we still manage to buy and sell in a what? Downtrend market. So that means we're not trading against the markets, right? Because market is selling. We should be looking for sales. So before we look for sales, we have to wait for markets to fall into a zone where we expect a sales to come from. Maybe this breaker block or this other block the market has just tapped into, right? So these are the zone that we expect what? A price to come into before we expect what? A corrective move to come from. Before we expect what? An impulsive move to come to start buying. That means we know that impulsive move is what? The original move of the market. So if I don't want to trade the corrective move, I have to wait for weeks, sometimes months, for price to come into this zone to give me my reversal pattern before I take a trade. And I don't want to wait for weeks to take a trade. I have family to feed. I have future to build, right? So that's why I learned how to use the impulsive and corrective move. That means just because higher time frame is bullish, that does not mean I'll not be looking for sales. I will be looking for sales, and I will be very, very skeptical about where I'll be looking for that sales. And that says I know what they're doing, what is their relationship with the higher time frame. So this is it. This is how you can use directional bias. This is the part one of the directional bias. So next class is going to be very, very interesting. It's when we're going to talk about internal and external structure. How you can use, you know that your external structure is the one that is going to determine your overall bias, which is your daily breakup structure, right? So how do you determine your internal and external structure? Even in lower time frame, you might still have internal and external structure. So next class is going to be very, 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 very interesting. And then I'm going to ask you guys for forgiveness about what has happened, about class, me not getting time to call class, but we are back now. Sorry, very sorry for what has happened. I'm just sorry, guys. I'm just sorry for not taking classes. I'm sorry, guys. I'm been into a lot of things, family, and then myself, which is not an excuse because you guys pay me money to teach you. I should not be giving you that excuse. That's my problem, not your problem. But trust me, it matters a lot. So I'm very sorry, guys. Very much sorry. And then see you in the next class. I'm going to send the recording to you now. And then sorry, guys. That's it, guys. Mr. Fresh, Kobe, Raise That Crypto, all of you guys. Sorry. So see you in the next session. I'm going to end this class now.